Week 6 brought the volatility as we expected. There were trade updates, there were earnings announcements, um, there was the Fed event. So, just as we expected, there was a lot of market movement, but we did end the week with 767 in profits. I started the week with the bear call spread that was open from last week in NVDA. And the week started off, the market started to trend higher. NVIDIA went up into the 175 range. I went ahead and added even more of a bearish position short term, and I bought the August 15th puts at 170, expecting a pullback. This move was a bit premature, but I still felt confident that at some point we would see some volatility this week. So I started to add to my downside bearish move. I expected this to be a short term trade. I was hoping just to take advantage of some quick downward movement in the market. Initially, it looked like the move was going to work out. There was a bit of recovery, but going into Tuesday, the market continued to trade higher. We did momentarily see the market hit, or NVIDIA hit 179 on Monday afternoon, and that's when I figured it may be time to make an adjustment to these positions. I was looking at being in a net credit bear call spread as I was looking to make money by NVIDIA staying below 185. But as the market continued to trend higher, I figured if I got the opportunity again with NVIDIA trading around 179, I would switch the position up and I would buy puts instead of just being more so short in the call position. Moving into Wednesday, Microsoft and Facebook had a blowout earnings report. So at that point, Nvidia started to trade a lot higher. As you can see here, was trading around 178. This is when I decided that it may be a good move to look into buying a longer term put position just in case the market continued to trend higher in the short term. So you can see here, I'm closing out the three 170 puts that I bought earlier in the week. I figured these were going to be at a loss as NVIDIA continued to trade higher. And I went ahead on Wednesday and started to close out the bear call spread that I was leaving open in NVIDIA. At this point, I'm thinking it's time to just let this position go, take the loss, and go a bit more aggressive by buying puts out to November. The time frame gives me more time to ultimately be right, just in case the NVIDIA continues to go higher. This will give me more time to be right versus taking on a large loss if NVIDIA crosses over the 185. But also, it gives me more potential to make larger profits should NVIDIA sell off aggressively. As you can see here, I'm completely closing out the position, which is opening up all of my buying power because there was a lot of collateral involved in this position. So it's opening up my buying power so I could go ahead and buy longer dated puts. Ultimately, I bought six 170 puts. I started off with five here, and then we turned around and bought one more to start the more aggressive debit position in NVIDIA. as we try to do with most positions, once we open up a position, we always want to open some protection. So at that point, I went ahead and bought NVDA 195 calls just in case the market continued to trade higher. I want to have at least some money going in the opposite direction. And after I buy the call, I'm holding the puts. I went ahead and sold a call against the call. I wasn't expecting this call to become profitable, the one I bought. So I'm going to go ahead and sell the 195 call against it just to make a bit of profit. And I went ahead out to August 8th to sell that so I can make $29 on that sell. I looked at that as pretty much guaranteed money. And I'm going to turn around and do the same against the 170 puts that we have out to November. The goal of what we do when we open up most positions is we're always looking, if possible, to sell against that position to make basically guaranteed money. So as you can see here, I'm going out to August 1st, Friday. I'm selling the 160 puts against the 170 puts. And that's a potential $50 in profit. So I'm basically hedging against my open positions in the goal of taking up the time decay. Because if this position starts to trade up and down, the market gets choppy, you can lose money by waiting for the position to materialize, and then you can make up for those losses by selling against your position a bit further out. I'm still playing pretty aggressive here, thinking that we're definitely going to see some type of pullback at some point this week. The market was going up fairly aggressively. NVIDIA was very overbought at this point. So I went ahead and bought the 177.50 puts as well, expiring Friday of this week, just hoping for a quick turnaround and a quick profit on the trade. Every time I opened up a new long position, I sold against it just to get a potential gain on the sell against, or at least to take up any potential time decay. So here I'm selling the 160 puts against the 170 puts that I had open, or the 177.50 puts that I just opened up. So I'm selling against those. And finally, we got to a point Thursday where we stepped away. We felt like we had our positions open that we wanted open. Once NVIDIA crossed over the 180 mark, we decided to go ahead and take profits in the 160 puts that we closed against our position. And we went ahead and closed out the 177.50 puts because at this point the market continued to trade higher. So we went ahead and closed this out. We accepted the loss on the 177.50 puts. We also went ahead and took profit on the calls that we had open. This is where we close out the 177.50 puts. We just accepted a loss on these. So at this point, I am starting to wonder if I moved a bit too soon by buying the 170 1121 puts, because we were at picking up a pretty hefty loss early on in this trade. I'm buying the 190 call there, not because I think NVIDIA is going to cross over 190 in the next couple of weeks, but just because there's always a possibility that we're wrong. So I went ahead and bought those 190 calls just as a protective stance. And then I sold the weekly 190 calls against that position. So as you can see, the week it did get a bit choppy. It got scary as the market continued to trade higher, but the conviction was in with Nvidia already having such a high market value that at some point there would be some event, some announcement that would turn the market around this week. This is Thursday afternoon. We finally started to see a pullback in the market. As you can see now, the 170 puts became profitable by Thursday afternoon. And then moving into Friday morning, the market really sold off. And as you can see here, the puts became very profitable. I went ahead and started to close out the calls, taking a loss on the hedges that I opened up on the calls. So I'm going to take the loss here. And then I decided to leave the position open just to see how much profit we could pick up on Friday. The 170 puts that I sold against the position, I decided to go ahead and let those go. The weekly puts I sold against as NVIDIA dropped pretty fast on Friday. So I went ahead and took the protection. So at this point, I'm closing out all of the protection. We're having a good day. As you can see, I'm up over 1,000 in the 170 puts and the 180 puts that we bought in NVIDIA. This is when we go into a mode of we don't want to let go of our position, but we just want to watch it closely to look for an opportunity to take profit. We don't want a big gain to get wiped out by a short-term reversal in the market. And Nvidia, if Nvidia continued to go higher, we wanted to take profits. Here we are closing out all of our open positions that were built for protection. And this will allow us just to watch our account value closely to pinpoint when we want to take profit. So on Friday, we got to a point where we were at 10,600. And this is when we're looking and saying, at what point am I going to start taking profits? So a pullback, basically about $1,000. And we went ahead and said, okay, sell the 180 puts. Let's get rid of those, take profits on those. And we're going to watch it a bit longer to see if the market pulls back more before we let go of the 170 puts. As you can see here, NVIDIA continued to bounce. We got to a point where our account value was going in the wrong direction. So we went ahead and sold off our entire position. So first we have to close off the 160 puts to allow us to close out the 170 puts. Before I close out the 170 puts, I started to build the position for next week. We're expecting more volatility in the coming week, so I built a straddle position around the 175 calls and the 170 puts, expiring August 15th. For the remainder of the day Friday, I simply built into this position. And once I got to start, taking a step back, once I got to start in that position where I had the 175 calls and the 170 puts, now I'm watching my positions for movement, looking for an opportunity to hit sell on the November 170 puts. So once the 170, 815 puts start to lose value, that's telling me that, hey, the market is still going in the direction you don't want it to go. NVIDIA is bouncing back. Let's go ahead and close out the November 170 puts. It's always tough to let go of a trade. You don't want to let go when you're down. You don't want to let go when you're up. But ultimately, to realize profits in trading, we have to be willing to hit sell. So I went ahead and closed out the November 170 puts for a profit. For the rest of the day, I just built into this position. I bought more 175 calls. I bought more 170 puts expiring 815. And I got to a point where I had 10 puts and 8 calls because that pretty much set off the delta between the two. So at this point, I'm in a position where there's not much risk either way as long as we see a lot of movement in the market. If the market starts to get choppy or we're not seeing much movement, we'll just cut our losses in this position and walk away and look for what opportunities the market presents in the coming weeks. So there you have it. A volatile week, as expected. We had to make some adjustments to reposition ourselves for the optimal play for profitability. But that's one of the benefits of having a smaller account is we can be agile with the market. That's what I did this week. I took advantage of being able to make the adjustment as the market traded higher. I was able to shift my position and see good profits come close of Friday. See you next week.